is run by investment bankers. Morningstar's modus help make quick.
Mijn naam is Maarten van der Pas en vandaag praat ik met Morningstar-analyst Oliver Kettlewell over schuld op opkomende markten. Oliver, the emerging market debt fund has seen large inflows in recent months. What are these funds and why are they so popular?
Emerging market debt is basically bonds issued by the government or companies in developing countries. And the reason why it's becoming so popular is because people think that the long-term fundamentals of developing countries is actually stronger than sort of traditional Western economies.
And what are these fundamentals?
Yeah, I think the main one is commodities. Most emerging market countries have an abundance of natural resources, and so therefore they've benefited from commodity price increases of recent years. To give you a couple of examples, you think of perhaps coal mines in Indonesia or oil and gas fields in Russia. And the increase in commodity prices has helped these countries sort of gain a lot of money, and it's been easier for them to pay the interest payments on the bonds they've issued.
Reliance on commodity prices alone is quite risky. Are there any other things in favor of these countries?
Yeah, I think there's increased domestic consumer demand. So whereas some of the sort of developed market economies such as here in the Netherlands or in the UK or US have suffered a bit from domestic demand, domestic demand in emerging markets has remained strong. The banks were not so heavily overloaded with the bad debt that we've seen of the credit crisis, so they were able to continue lending to consumers. Consumers were able to keep spending, and this has sort of helped growth remain relatively stable.
And which countries are best in shape?
I think Turkey is a good example. 10 years ago, it had its own banking crisis. It cleaned up the banks. They've got a lot more high quality balance sheets now, and they've been able to continue lending. I think out of all of the countries, perhaps Brazil has the best, among the lowest fiscal deficit, and that's not only for emerging markets but also for developed markets. So, you know, it's not just commodities here; it's some other good long-term fundamentals as well.
There are two ways to invest in emerging market debt: hard currency funds and local currency funds. What are the differences between them?
Yeah, so hard currency is basically a traditional way of investing. It's bonds issued in dollars or in euros or in yen, and then the newer version is local currency. So that's the soft currency. That's the home market currency of the country. So Brazilian real or Russian ruble or so on and so forth. Historically, the hard currency funds have done better, but as I said, the local currency funds are quite new.
And with all these positive attributes to emerging market debt, what are the risks involved for investors?
I think political risk remains perhaps the biggest risk for emerging countries. You know, to give you an example, if you think of a bond issued by Venezuela, you probably trust Venezuela's ability to pay the bond back and the interest more than, say, for example, the UK or the US. You have more confidence in that. So political risk is always going to be a bit more of a problem with emerging market countries. Inflation as well. But, you know, I think the underlying point is that it's a good diversifier, this category, you know. I think if an investor has 5 to 10% allocation, it has a low correlation to traditional equity categories. So I think if they want to sort of benefit from the long-term positive trend that I've been talking about, a small allocation would be a good idea.
Thank you, Oliver. En meer informatie over opkomende markten is te vinden op onze website morningstar.nl.
Is run by investment bankers. Morningstar's modus help make quick.